Hey guys, what's up? PipSnipers here, back for another update. Let's take a look at this coin called Dent. Now, I'm very bullish on this coin. I do think that it will have a really nice explosive move to the upside. And this over here looks like it could be your A, B, and your C wave. Then you have your A, B, C down. And then what happens over here is the price starts to funnel. And usually this happens when there's a lot of indecision or when there's a wall of worry in the markets before you have a distribution phase in the market, right? So this is your 1, 2, 3, 4, and then you have the breakout, you have a back test back into the range or a retest into the range, and then you have your expansion to the upside. So that's what I'm thinking is happening here on Dent. As long as we can hold this higher low, higher high structure. I mean, we could do this. So I'm going to show you guys this 200-day moving average, and we'll also add the 21-day moving average onto our chart. Now, I want to show you something very strong that will allow you to hold a position to the very last point in the market cycle of this coin. Now you can see over here that when we use the 21-day moving average, and take a look at this on the 3-day time frame. Before I show you this, let me just add the 50-day moving average onto the chart. Let me just add it here. Okay, so notice how we back tested the 50-day moving average right here. We got above the 21-day, and as long as we can hold above the 21-day, and the 200-day moving average, which is this line right over here, I'll make it purple. Yeah, so this line right here, as long as we can hold above that line, then I think we'll go ahead and break out of this creek in Wyckoff accumulation, right? Because in Wyckoff accumulation, this is your preliminary supply, your selling climax, your automatic rally to the upside, your secondary test, your failed breakout, your secondary test in phase B sweeping the lows again, another move right back up to the top of the range for your failed breakout number 2, and then you have a creek down to the lows of the range, sweep those lows, have a retraction back into the range. So this would be considered your spring, your test, and then if we can make another higher high right over here, let me see here, like right over here at 3089, then this would be considered your last point of support before you move up to the top of the range. And in Wyckoff, you would consider this your sign of strength and your backup phase before you have continuation, right? Or we have a push up to the 61.8% fib for your sign of strength, and then for the bear market, this would be your back test for your backup phase, right? You know, sometimes it may not even come back to the top of this range. This is not guaranteed, the backup phase, because most of the supply has been absorbed over here in the spring, which causes the price to just continue on upwards and never come back to this region. There's a very big possibility of that. So that's why I'm saying take profit here just to be safe at around 0.0062 to 0.0068, just that fib cluster right there. So we'd be taking a look at around, let me just delete these drawings here. We'd be taking a look at around 777% right here. I'll show you guys. See? Around 772. And then just in case it does something like this, where it comes down a little and then pops up here and then comes down, and then you form bearish divergence on the RSI. So that's why I'm saying maybe take majority here, leave some aside just in case it comes to the 702, maybe even the 786. You never know. That's why you should always do laddered sells. But something a little bit more powerful. I want to get back to this point that I was making at the beginning of the video. We went off on a little bit of a tangent. Just use the 21-day moving average. Take a look at this. Let's just delete everything. Or sorry. Yeah, let's delete all of these drawings. And delete all these fibs as well. Damn, I don't know. It's not working. So what we're gonna do is we're gonna go to this layout right here. Okay. Now all you have to do is take a look at the 21-day moving average on the 3-day time frame. And what do we see over here when we were riding the parabolic phase to the upside? Now there's 3 market phases. There's a downtrend, there's sideways, and then there's an uptrend, right? 3 market phases. So once you decide which market phase you're in, then you can better understand this type of way, this way of taking profit. So there's 3 different types, and then there's also the crab, right? It's just crabbing, it's way up. So you only want to use this indicator when you're in the parabolic phase. All of these other market phases, you shouldn't use the indicator. And you're going to want to place the 21-day moving average onto the chart. And look at this over here. Back in 2017, we never got a 3-day closure during this parabolic phase below the 21-day, which is the red line. Do you guys see? Never got a 3-day candle close this whole entire time. And then as soon as you get it over here, and then you get another 3-day close below it, that's your sell signal, because then price dropped by over 96% from that level. Okay, now if we take a look over here, back in the 2021 run, look what happened here, right? So we were just crabbing up, going sideways, and this is the parabolic phase. Okay, so this is what you'd want to be focusing on. You'd want to look to be selling into. Remember, you only want to use that one market phase, and it's if the market is trending up in the parabolic phase, not doing this or this, right? You want to look for this, where the incline is very steep. And you see over here, same thing. Never got a 3-day close below the 21-day. Only over here. And here, and here. And then you would have exited and saved yourself from this huge drawdown. Right? And you even had a second chance over here. Because look, it popped back above the 21-day and the 50-day. And then we went back down again. Then we crabbed up, and then we went back down we went back below it again and below the 200-day. Right? You had 2 chances to sell the bag there. So I'm saying, if we can use the same type of idea in the current day, I think it'll allow us to hold the position all the way up, right? This is the 618. Could come up to the 702 or the 78.6% retracement. Something like this, right? That would be really cool if it did something like that. So you can use two different strategies to sell your bag, right? Once it comes up here, yeah, you could take your first TP based off of a fib level target. But as long as it's still holding above the 21 day, then you have bias to hold the rest of the position, or you can use either or, right? Whatever you like. But yeah, this is what I see on Dent. There's two different types of ways this can go, right? It's either that we have this breakout to around 0.0068, which is the 61.8% fib, right over here. Okay, and then we come back down for the bear market to backtest this top region, or we do something like this. Where we blast off right to the 702 and 786. Honestly, I wouldn't be surprised if it did something like this. This makes sense, because look how long we've been consolidating here. So right, and then if you use the 21-day moving average, I feel like you'd be able to sell the top all the way up. Hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out, take it easy. See you guys in the next one.